Well, one company that's also been fairly active and drawing quite a bit of attention is Cholamandalam Investment and Finance Company. Arul Selvan, President and CFO, now joins in. Arun, hi, thank you very much. Arul, thank you very much for joining us this morning. It's indeed a pleasure to have you on the show. Sir, to begin with, let's talk about business. And I want to start by talking about volume growth in commercial vehicles. Fourth quarter and FY25 expectations. Are you anticipating some moderation in the next couple of quarters?
The growth in the current quarter will be as robust as what we have been clocking in the first 3 quarters. While from a base level, this may look a little lower because last year, same quarter, we did a very high number. So to that extent, growth would look moderating from a growth percentage perspective. But I think from a number count and from a value perspective, we would still be clocking 20 to 25% growth overall for the company.
Sir, you've also said and indicated that you would be looking to grow your asset base, so your AUMs were 20 to 25% for FY25. You want to tell us whether that is where we'd be seeing growth at, or do you think there is an upside risk to that number?
No, there is. I wouldn't want to put any further upside to it, but I would rather hold it there, and I would say that we would certainly be closing the year with at least 25% growth in an AUM perspective over last year. So from that angle, we stick to our numbers.
Sir, you know, over 40% of your AUM comes from CV. What is the impact this will have to growth, and how much more of a percentage contribution can we expect from this vertical to your top line?
Yeah, CV has been a little bit moderating more from an MLCV side, but I think that is the point of that full diversification we got, both within the auto segment as well as from the other businesses like loan against property, home loans, and the new businesses we have ventured recently. Amongst all these, we will keep the clock running, and we will be clocking this growth of 25%. Certainly more from the loan against property and the home loan perspective as a percentage point of view. Little bit moderations on the vehicle finance side, but still clocking at decent numbers. We still have very low market share in any of the sub products within vehicle finance, so there is enough headroom to grow, and we would certainly capitalize on that.
I'm glad you said that, because that is my next question. Talk to me about home loan. I mean, that business is locked in an increase of over 100%. In percentage terms to your top line, how much does home loan contribute? You did say it's a relatively smaller share of your top line, but what does it stand at, and where do you see that go over the next couple of quarters?
The home loan right now is at around 8 to 9% of the overall book, and which we think over the next few years it should become around 15% of the overall book. So there's a good potential to grow. The growth you're seeing is also coming from geographical diversification we are doing. Home loan typically had been more concentrated in the south for us because we were experimenting the product. It's a long life cycle product. We've been experimenting it, and when we were ready to grow, unfortunately, like COVID was there, so we had to defer the plans for expansion. But post-COVID, we have been, growing this business in the different parts of the country, in north, east, and west. And you are seeing that growth reflected in these numbers you're talking about. And this has got still some more steam to go, and we have potential to grow. They ride on the vehicle finance branches to grow, so they have a good, base to grow from, and they will capitalize this.
So, what about unsecured lending? Are you anticipating or seeing any risk over here?
No, it's a very small portfolio right now for us. So total CSEL business, which is around 7% of the overall AUM. And within that, you have the traditional model where we have our own teams meeting the customers and giving the loans. Those loans are 3/4 of the 6%, 7%. So the very small fintech oriented loans are there, and even there, but for the one or two which we spoke about earlier, which we have discontinued, the rest are doing well. So we see potential there. Yes, we will be careful. It's a new business. As in any new business, we will experiment it, understand it, and then grow in a progressive manner.
So on the liability side, you have managed to keep your cost of funds down and also managed to improve your NIMs. What is the guidance on that front in the near to medium term? Do you think you will expect to maintain similar sort of cost of funds?
Yeah, cost of funds would hover around these levels predominantly. We are changing the mix. We are bringing in more of, ECBs and public debt. It's slightly costlier, but between the rest of the borrowings and this, we will hold the cost of funds at similar levels. And on the other side, yields have been improving because fixed vehicle finance book, which has been a fixed rate book, had progressively been changing the contours of its book to bring in the higher cost of funds into play by increasing yield. So that would reflect in NIMs improving progressively over the next few quarters.
So in the second quarter, you had done a QIP of about 2,000 odd crores, and this of course has helped your capital adequacy ratio to be maintained around the 20% mark. Now as we look ahead, any more fundraising plans? Are you comfortable with this capital adequacy ratio, and this is where we could see it sustain for the next few quarters at least?
See, broadly, our experience had been that if we grow at around 20-25% and return 3.5% and or above pre-tax ROTA, it should be self-sufficient as long as we don't go too aggressive on the dividend path. This is what has been our experience, because during COVID, our profitability had taken a little bit of a slowdown, and on the other side, growth started growing faster post-COVID. Both this contributed the need for capital, and we went for it. Actually, we raised 4,000 crores, 2,000 crores by way of equity and 2,000 crores by way of a convertible debenture. Now that is available to get converted into equity in 25-26. So that would also come into play. I think for the next 3 to 4 years, we certainly don't need equity capital. However, if there are opportunities, and we are not averse to raising capital.
Any opportunities, any expansion plans that's on the cards that you'd like to tell our viewers and your investors?
Certainly, we don't pursue inorganic growth. I think this question keeps coming back and forth, but I think we don't pursue. It's a stated thing that we don't want to pursue taking over another NBFC in any form or factor. We would like to grow our business on our own, way by underwriting and viewing every customer, every loan before we extend loans for them. We don't believe in taking over a large part of a book of another NBFC. So this is right now our stance. I don't know. As we keep moving, we'll look at opportunities, but predominantly the focus is this way.
So very lastly, 33% of your loan book is floating. Would you look at changing rates if that moderates? And I just want to understand, would that require action largely because how your loan book is structured?
You are talking about asset side, right?
Yes.
Yeah, the loan against property and the home loans, which are predominantly the floating rate book, and now the new businesses, SME and SBPL will also be floating rate book. Yes, if there is substantial reduction in rate, we certainly would have to pass it on, because if we don't pass it on, customers will start moving out. So we would like to retain our customers, and we will certainly pass on. But it's a point of time question, so we will have to evaluate it at every point in time and then take a view at that point in time.
Right. Thank you very much, Mr. Selvan. It's a pleasure talking to you. Chola has been a darling of the street. It's been a good quarter, and it's got a solid outlook as well, like discussed with Mr. Selvan. That was Chola. The stock continues to do well. It's actually trading flat this morning, but it's had a good run, remember, in the last couple of months itself. In the meantime, the markets also trade flat. We're off